Assalamualaikum and good day everyone. We are from Group 1 and today we will be presenting our investment portfolio analysis. This presentation focuses on the construction and management of an investment portfolio consisting of 5 actively traded stock listed on Bursa Malaysia with an initial capital of 50,000. The portfolio was developed using the top-down approach where we first analyze the overall economic condition, followed by industrial analysis and then apply fundamental and technical analysis to select suitable stock. The main objective of this approach is to identify strong companies while minimizing risk through proper diversification. Our selected stocks are spread across different sectors of the Malaysian economy, including consumer goods, construction, real estate, tourism, and banking. This diversification helps reduce systematic risk while balancing both income generation and growth potential. In this presentation, I will first briefly explain the rationale behind our stock selection, followed by an overview of how this portfolio contributes to stability and long-term investment performance. First and foremost, we will begin our analysis by identifying economic analysis focusing on monetary policy. The overnight policy rate or OPR is the main interest rate set by Bank Negara Malaysia to influence borrowing, spending and overall economic activity. Until November 2024, the OPR was maintained at 3% to ensure price stability and balanced economic growth. In July 2025, Bank Negara Malaysia reduced the OPR to 2.75%. This interest rate cut was implemented to stimulate economic growth, especially in the face of global uncertainties such as trade tensions and geopolitical risks. A lower OPR reduced borrowing costs, encouraging households to spend more and business to increase investment. This policy decision was supported by a stable inflation environment, with inflation remaining low at around 1.3% to 1.5%. Since inflation was well under control, Bank Negara Malaysia had sufficient room to adopt a more accommodative monetary policy without risking excessive price increases. Overall, the OPR cut helped support consumption, investment and economic resilience. On the fiscal policy side, Budget 2025 shows the Malaysian government is trying to support the economy while also controlling its spending. The total allocation is 421 billion ringgit Malaysia, which is the highest ever. This means the government is still spending more to help growth, but in a way more careful and plain way. One major change is subsidy rationalization. Instead of giving fuel subsidies to everyone, the government introduced a targeted fuel subsidy called Budi Madani Round 95. It starts in September 2025. This means only eligible groups receive subsidies. By removing blanket subsidies, the government can reduce unnecessary spending and save money. At the same time, the government improved its income through tax reforms. The sale and service tax or SST was expanded. A 2% dividend tax was introduced for high-income earners. These measures help increase government revenue. Overall, the goal is to reduce the fiscal deficit to 3.8% of GDP and ensure long-term financial stability for Malaysia. On the other hand, Malaysia's economy performed strongly in 2025 with GDP growth reaching 5.2% in the third quarter, which was the highest growth rate for the year. This strong performance was mainly driven by strong domestic demand, meaning people were spending more, stable employment and the recovery of the electrical and electronic export sector, which increased export earnings. The labour market also remained strong. The unemployment rate stayed low at 3.0%, which is considered full employment. This shows that most people who want to work were able to find jobs. In addition, the minimum wage was increased to 1,700 ringgit Malaysia in early 2025, which increased workers' income. As a result, households had more money to spend, leading to higher disposable income and stronger domestic consumption. This higher spending by households helped support overall economic growth and kept the economy moving despite global uncertainties.
Next, the Malaysia Berhad is part of the consumer goods sector in Malaysia. Firstly, the industry overview. The consumer goods sector in Malaysia is essential, providing daily products like food and beverage. Demand for these goods remains stable even during economic downturns as people continue to buy what they need. Recently, there's been a rising demand for healthier products like low sugar beverage and fortified foods. Companies in this sector face high competition, both from local and multinational players, and must comply with regulation on food safety and halal standards to maintain consumer trust. Next, the growth cycle of Nestle. The company is currently in the maturity stage, meaning it's not experiencing rapid growth, but is focused on maintaining its position in the market. Nestle holds a 37% market share in Malaysia, with flagship brands like Milo and Maggi being consumed by 96% of Malaysian households. Despite rising material costs, Nestle remains profitable, recording Rm 6.22 billion in revenue and a 2.9% growth rate, which is typical for a mature company. The company also prioritized dividends, paying out Rm 1.79 per share for 2024. Lastly, regarding competition position, Nestle is a market leader with Rm 27 billion valuation. The company's strong brand recognition, distribution network, and commitment to sustainability make it a dominant player with high financial returns, including 73.5% ROE with a focus on innovation. Nestle market position remains secure, making it a low-risk investment. The Bunda Berhad is the construction industry. Firstly, the industry overview. The construction industry is a key driver of Malaysia's economy, especially as the country continues urbanizing and developing infrastructure. There is strong recovery in the sector, led by public utilities and industrial projects. The focus is shifting toward green technologies, sustainable materials, and the use of digital tools like building information modeling (BIM). The market is highly competitive, but it has an optimistic long-term outlook despite challenges like fluctuating material prices. Moving on the growth stage, the industry is nearly yearly maturity as urbanization progresses and major city development level off. Bunda Berhad is experiencing strong growth with a 14.2% growth rate in early 2025. This is backed by a massive Rm 38 billion order book. There's a structural shift toward high-value engineering projects like data centers and renewable energy, as well as adopting new technologies like BIM, automation, and big data analytics. Finally, in terms of competitive position, Bunda Berhad is the largest player in the industry with Rm 29.5 billion market capitalization. The company has a massive project pipeline and is recognized as a technological leader, utilizing BIM and digital building solutions to stay ahead in the market. Firstly, the industry overview. Real estate investment trusts or REITs are a key financial sector in Malaysia that allow investors to indirectly invest in properties like malls, office, and hospitals. Sunrise is valued at Rm 4.9 billion, offering stability and attractive yields for investors. The company is focusing on green building and technology-driven modernization to stay ahead in the market. Despite challenges like the rise of e-commerce and increased costs, Sunrise maintains a resilient outlook supported by rising visitor traffic. In terms of growth stage, Sunrise is in the late growth to early maturity phase, shifting from new mall openings to asset upgrades. The company saw a strong 25.3% increase in NPI, net property income, in Q3 2025, demonstrating robust performance. Sunrise is diversifying by investing in high-demand areas like logistics and industrial warehouse, alongside its asset enhancement initiative (AEI) to boost rental revenue in a competitive market. Finally, regarding the competitive position, Sunrise is a major diversified REIT within the Sunrise City ecosystem, benefiting from strong integration with the city developments. With a 74.3% net profit margin, 6.64% yields, and an exceptionally high 95.9% payout ratio, is a solid choice for investors seeking consistent income and long-term growth. Bunda Berhad is in the consumer service industry. Firstly, the industry overview. The tourism and the entertainment sector in Malaysia has seen significant growth, especially with the recent relaxed visa policies and government support, including Rm 550 million for global marketing and promotion. Bunda Berhad is embracing digital transformation using AI and mobile apps to improve guest experience. The industry outlook is bright, driven by eco-wellness trends and the upcoming Visit Malaysia year 2026, which is expected to boost tourism even further. Moving on to the growth stage, Bunda Berhad is transitioning from a late growth to early maturity phase. The company is seeing a recovery-driven profit with Rm 680.8 million in 2025, fueled by the revival of international travel. Bunda is diversifying revenue into emerging sectors like life science and green energy, while continuing its digital integration to modernize the guest experience. Finally, regarding its competitive position, Genting Berhad is a global player with flagship assets in Singapore, Las Vegas, and Malaysia. The company is currently undervalued with a price-to-book ratio of 0.37 times compared to its RM 104 billion asset value. Genting is aggressively expanding, supported by a RM 12 billion investment in new projects. Bank Berhad is in the financial service industry. Firstly, the industry overview. The financial service sector in Malaysia is stable and resilient, regulated by Bank Negara Malaysia (BNM), with steady loan growth at 5.5%. The sector is undergoing digital transformation, utilizing technologies like AI, blockchain, and fintech to enhance services. Malaysia ranks 21st globally for accessibility to financial tools, with a strong focus on financial inclusion. The industry is also modernizing with MFRC compliance and a shift toward digital payments in response to the growth of e-commerce. Regarding growth stage, Private Bank is in a mature banking phase with a market value of RM 87 billion and a large customer base. The company is experiencing a stable 3.2% growth rate, which is typically for a well-established leading financial institution. Private Bank is considered a defensive stock characterized by low volatility and reliable 4.76% dividend yields. The company focuses heavily on operational efficiency, maintaining a cost-to-income ratio that is significantly better than the industry average. Finally, in terms of competitive position, Private Bank is a market leader with a RM 87.74 billion market capitalization. The bank has best in class efficiency with a 35.3% cost-to-income ratio and maintain conservative management practice that ensure consistent return to its investor.
Assalamualaikum and hi, my name is Nur Aliyah binti Muhammad Ali and my matric number is 297361. Today, I'm gonna present about the financial conditions and the operating result. Starting with the Nestle Malaysia Berhad, the company shows strong profitability with a gross profit margin of 46.72% and a net profit margin of the 11.93%, which is reflecting effective cost control and the pricing power. Its ROE of 29.71 and the ROA of 7.83% indicate the efficient use of equity and the asset. Although Nestle current ratio of 0.82 suggests lower short-term liquidity, this is common among the established consumer goods company with a stable cash flow. Debt to equity ratio of 1.73 indicate the higher leverage, but the risk is spotted and strong and consistent profitability. Next, the Gamuda Berhad demonstrates solid financial performance. The gross profit margin is 12.08%, is reasonable for the constructions industry. Despite thinner margin, Gamuda record a very strong ROE of the 79.16% and ROA of 34.22%, indicating the highly efficient use of the resource. The current ratio of 2.14 reflects strong liquidity, while a debt to equity ratio of 0.69 show the moderate leverage and the lower financial risk. For Somewhere REIT, the company record a high gross profit margin of 74.31%, reflecting strong rental income. However, this is offset by a lower net profit margin of 6.84%, along with a weak ROE and ROA, indicating lower return to investor. The current ratio of 0.16 show weak liquidity, while the debt to equity ratio of 0.77 reflect the moderate leverage, which is common in the REIT sector. Moving on to the Genting Berhad, the company demonstrate relatively stable financial performance across profitability, liquidity, and the leverage measure. Genting Berhad record a gross profit margins of 29.39%, indicating reasonable operating efficiency, while its net profit margins of 72.22%, which is reflects strong overall income generations. However, the ROE of 3.74% and ROA of 1.60% suggests the modest return and limited efficiency in utilizing equity and asset. In terms of liquidity, the company reports a current ratio of 2.58, indicating a strong ability to meet the short-term obligations. Meanwhile, the debt to equity ratio of 0.76 reflect the moderate leverage and the manageable financial risk. Lastly, Public Bank Berhad demonstrate a strong and conservative financial positions. The bank record a net profit margins of 26.27%, supported by the effective cost control. Its ROE of 11.99% and the ROA of 1.32% are consistent with the banking industry. The current ratio of 1.11 indicate the sufficient liquidity, while the low debt to equity ratio of 0.16 reflect low financial risk. Based on the valuation result, Nestle Malaysia Berhad has an estimated intrinsic value of RM50.99, which is significantly lower than its market price of RM112.50. This indicates that the stock is overvalued, suggesting the limited upside potential at the current price. Therefore, investors are advised to sell or also avoid this. For Gamuda Berhad, the estimated intrinsic value is RM6.11 compared to a market price of RM4.82. Since the intrinsic value exceeds the market price, the stock is considered undervalued, indicating potential for the capital appreciations. Hence, Gamuda Berhad is recommended as a buy. In terms of valuation, Genting Berhad has an estimated intrinsic value of RM6.42, which is significantly higher than its current market price of RM3.02. This indicates that the stock is undervalued, suggesting potential upside. Therefore, investor may consider buying the stock, while existing investor may hold it in anticipation of the future value appreciation. In terms of valuation, Genting Berhad has an estimated intrinsic value of RM6.42, which is significantly higher than its current market price of RM3.02. This indicates that the stock is undervalued, suggesting potential upside. Therefore, investor may consider buying the stock, while existing investor may hold it in anticipation of the future value appreciation. Finally, the Public Bank Berhad has an estimated intrinsic value of RM4.48, which is equal to its market price. This suggests that the stock is fairly valued, meaning the market price accurately reflects the company fundamentals. Therefore, the stock is suitable to hold, particularly for investors seeking stable returns and dividend income. That's all from me. Thank you.
Next, we will move to technical analysis. And first, we will focus on MACD. The Nestle Berhad experienced a bullish trend from August to October, where the MACD line is above the signal line, but the momentum weakened in November with a bearish crossover. Next is Gamuda Berhad. Gamuda Berhad shows a bearish divergence in late August, but it failed to maintain the bullish crossover in October and leading to a bearish momentum in December. And the third is Sunrise. Sunrise started with a bearish momentum in September, but bounced back into a bullish crossover, and then it turned positive again in December. And the fourth is Genting Malaysia Berhad. Genting Malaysia Berhad, MACD moved sideways initially, and it saw a sharp bullish crossover in October, reaching a peak, but it transitioned into a long-term bearish phase in November. And the last is Public Bank Berhad. Public Bank Berhad had a bullish crossover in mid-August, followed by downward momentum in September, but it turned significantly positive from November through December. The second technical analysis we will focus on is the relative strength index. For Nestle Berhad, it reaches overbought levels in August and October, but it dipped to oversold in late November and providing a buy signal before stabilizing in December. Next is Gamuda Berhad. Gamuda Berhad overbought in late August and hit oversold in late October and signaling a rebound, recovered to a healthy 50% area by December. Third is Sunrise. Sunrise reached a overbought area in late August, dropped to oversold in early November and leading to a V-shaped recovery and ending December overbought. And the fourth is the Genting Malaysia Berhad. Genting Malaysia Berhad sharp rise from oversold to overbought in late August, and it hit overbought levels again in October and dipped below 30% in December. And the last is Public Bank Berhad. Public Bank Berhad has high volatile and spiked to overbought in late August, then dipped to 30%, and repeated this pattern in October and recovered to 70% level by the end of December. The third technical analysis we will focus on is the moving average. There are three types of moving average, which are the short-term moving average, mid-term moving average, and long-term moving average. For Nestle Berhad, the mid-term moving average and long-term moving average shows a positive upward trend, where it is a long-term bull market signal. And for Gamuda Berhad, the short-term moving average shows a short-term bullish momentum, and the long-term moving average also shows a signal of long-term bull market. For Sunrise, the mid-term and the long-term moving average all is below the current price, and it is a healthy trend and shows a signal for long-term investor. For Genting Malaysia Berhad, the short-term moving average is higher than the current market price, which is a downward pressure. And the mid-term moving average also become a resistance level for the market price, and the long-term moving average shows that it will undergo a long-term bearish market. And last is Public Bank Berhad. Public Bank Berhad shows a good condition in short-term and long-term moving average, where it will become a long trend. And the last technical analysis we will focus is the support and resistance. For Nestle Berhad, it has two resistance level where the 120 ringgit and 20 cent is the stock peak price, and the two support level for the company serves as the historical safety area for investor. And next is Gamuda Berhad. Gamuda Berhad have two resistance level where the 5 ringgit 25 cent also serves as the long-term resistance. And the stock found support at 4 ringgit 73 cents in mid-December, and is a level that prevented further price drop and encouraged buyers to enter the market. For Sunred Company, the company has a primary resistance level at 2 ringgit 32 cents, which is the recent high market price, and the support level is 2 ringgit 18 cent and 2 ringgit 30 cent, which also encourage investor to take opportunity to enter the market. For Genting Malaysia Berhad, resistance level are established at 3 ringgit 13 cent, 3 ringgit 11 cent, and 3 ringgit 23 cent, where each has also two support. But the most important point is the support level at 3 ringgit 2 cent was recently broken and suggesting a potential for further downward movement. And last is Public Bank Berhad. Public Bank Berhad is currently facing a resistance at 4 ringgit 54 cent, and that is the current higher price for the company. And if the barrier broken, it would lead the stock to a new 52-week high. And the immediate support for the Public Bank Berhad is at 4 ringgit 49 cent, and the historical support is at 4 ringgit 38 cent.
Okay, so I will walk you through the trading performance of our portfolio, which named Profit Pilots. Over a short but active 2-week period from December 15 to 29, 2025, this portfolio was built with a clear goal, which is to balance both stability and growth through smart diversification across 5 key sectors of Malaysian economy. Our strategy was built on one core idea, which is don't put all the eggs in one basket. We spread our investment across 5 carefully chosen stocks with the following allocation. The first will be the Genting Berhad, which is 3,000 units for exposure to tourism and gaming recovery. Next one is Public Bank Berhad, which is 2,200 units representing the stable banking sector. Gamuda Berhad, which is 2,000 units to capture infrastructure-led growth. Nestle Malaysia 100 units as a defensive high-quality consumer staple, and Sunway Rate, which is 4,600 units for income and real estate diversification. This mix was designed to minimize unsystematic risk while capturing opportunities across the economy. Now, let's look at the result. Over just 2 weeks, the portfolio delivered a net profit of 1,286 ringgit Malaysia, which is a 2.5x return on our total portfolio values, which is 51,186 ringgit Malaysia. So, from Sunway Rate, we gained 598 ringgit Malaysia. From Gamuda, we gained 440, while Nestle, we gained a solid 300 ringgit Malaysia. But from Public Bank, we got a small loss of 22 ringgit Malaysia, and Genting Highland, we slightly lost 30 ringgit. This takeaway here is that the diversification work, which is gained from the 3 stock comfortably cover the small losses from the other 2. This slide show the price per unit of buying each unit of each company at 15 December. At 29 December, the price per unit of each stock are different, which is Genting Berhad and Public Bank Berhad the price is decreased, while Gamuda Berhad, Nestle Malaysia and Sunway Rate, the price is increased. The top performer was Sunway Rate, which generated the largest profit of 598 ringgit Malaysia from our position of 4,600 units. It was followed by Gamuda Berhad with a gain of 440 ringgit Malaysia and Nestle Malaysia with 300. This gain effectively offset the minor losses from the 2 least performing stocks, which is Genting Berhad recorded a loss of 30 ringgit Malaysia while Public Bank Berhad saw a slight decline of 22 ringgit Malaysia. This outcome underscores how a diversified strategy can balance growth with stability.
In conclusion, we built our portfolio by investing in 5 different industries to reduce risk and handle market uncertainty. Diversification is the key investment strategy because it helps us to protect the portfolio from sudden changes in share price. Despite market fluctuation, our portfolio recorded a net profit of 1,288 ringgit Malaysia, which represents a 2.58% return on the total investment. More importantly, this project helped us to understand how proper analysis and structured decision making lead to better investment outcomes. In short, this portfolio shows that smart diversification and informed analysis are the foundation of successful investing. That's all from us. Thank you.